As of September 2024, the Canadian economy is showing signs of recovery after a rough start to the year. Higher interest rates and inflationary pressures had pushed the economy into a mild recession, but recent developments indicate that things might finally be looking up. Let's take a closer look at the key factors driving this recovery and the remaining challenges. 1. Recession and recovery. At the beginning of 2024, Canada faced a tough economic period. High interest rates, set by the Bank of Canada to combat inflation, led to reduced spending, a slowdown in business investments, and a dip in overall economic growth. However, as the year progressed, the central bank began cutting interest rates, which helped the economy regain its footing. These rate cuts led to disinflation, meaning prices weren't rising as fast, and global economic growth began to improve as well. 2. Employment and wage growth. One of the brighter spots of Canada's economy has been the labour market. Despite the economic slowdown, unemployment rates remained relatively low, and wages have been growing faster than inflation for several months. This is good news for Canadian workers, as it means they are seeing real increases in their income, allowing them to keep up with the cost of living. 3. Inflation and interest rates. Inflation, which had been a persistent problem in 2022 and 2023, has been steadily decreasing. This gave the Bank of Canada room to cut interest rates in an effort to stimulate spending and investment. Lower rates mean that it's cheaper for businesses and consumers to borrow money, which in turn boosts economic activity. As inflation continues to trend down, more rate cuts are expected, which could further accelerate the recovery. 4. Housing costs remain a challenge. Despite these positive developments, one area where many Canadians are still feeling the squeeze is housing. Shelter costs remain a significant concern, with many households struggling with affordability. Even though interest rates have been cut, high housing prices mean that home ownership is still out of reach for many Canadians. Housing dissatisfaction remains high, and it will take more than just rate cuts to solve this long-standing issue. 5. Outlook for the future. While there are still challenges to overcome, the overall outlook for Canada's economy is becoming more positive. As the effects of lower interest rates continue to take hold, we can expect to see further improvements in consumer spending and business investments. If this trend continues, Canada could experience more robust growth by 2025.